Namibia, but the world over, is somewhat clouded by secrecy. And that's really because the organizations that are participating in these discoveries are listed on the various exchanges, and any sort of information or misinformation can disrupt the stock market. So that's why we guard it jealously. But we commissioned a study with Wood Mackenzie, and these are the most conservative estimates. We're looking at about 11 billion barrels of reserve. And of course, the Venus 1X discovery with 5.1 billion barrels. So towards the end of September, we'll have more explicit numbers following the finalization of the appraisal campaigns, essentially. And then, of course, you can't come to a conference like this and not hear of any volumetrics. So those are the associated barrels. So just to give you a context, so these are proven crude reserves in Africa in 2021 by country. So Angola, as you can appreciate, the oil and gas industry in Angola has revolutionized the Angolan economy, and they're sitting on 7.78 billion barrels of oil. And if you look at that relative to our discoveries, we're looking at least 11 billion with a population of 2.5 million. So you can just have an appreciation of how that will sort of revolutionize the Namibian economy. And of course, Libya, for political reasons, they're backing a tad bit, but they have got significant reserves of 48 billion barrels. The highest reserves in the world are sitting in Venezuela at 300 billion barrels. However, this is heavy oil, which is quite expensive and complex to extract from the ground. And the Honorable Minister, Prime Minister, indicated that we've got light oil, which is a much more better product to extract. So we've also got some facts around how these discoveries are located in relation to the global deepwater oil discoveries since 2015. So Guyana is the latest hotspot. So the Total Venus discovery is just below the Guyana discovery of 2015, essentially. Now, 3 of these 4 are in the top 30 deepwater discoveries since 2015, essentially. So these are just some key energy projects timelines. So you can see we're looking at going for FEED, so that's the front-end engineering design. We're busy with that for Kutu, so NAMCOR is working alongside BW Kutu, and we're looking at FID for Kutu for the gas-to-power project sometime in the 3rd quarter of 2024, essentially. And of course, there are efforts from the operators to expedite to first oil for the Total and Shell discoveries, essentially. And conservative estimates suggest that by sometime between 2029 and 2030, we are looking at first oil. But obviously, these timelines keep changing as you get a better appreciation of the reservoir. So, in terms of the phases, I think the phase where we are at now, we likely to require a light touch in Namibia. So the phase that we are at right now, we're looking at 2021 to 2026, arguably. We will be seeing very limited value because you have operators setting up in-country offices, but the recruitment is limited to primarily administrative and logistical positions. And of course, given the fact that we haven't finalized the appraisal campaigns, essentially. But phase 2 is probably the exciting one. And the Ministry of Mines and Energy has already started the process of developing a local content policy. And that is really aimed at unlocking the sort of indirect and induced benefits associated with the discoveries, essentially, through products and services to support the oil and gas industry. So between 2026 and 2032, we will see local benefits prior to production peak when project revenue starts streaming in. And then, of course, phase 3, that's post-peak benefits and economic impact that need to be sustainable in the Namibian economy to avoid an over-reliance on oil and gas, essentially. So then this is the conversation around the economic impacts of the discovery. So we've essentially got three impacts: the direct impacts, indirect benefits, and the induced benefits. The direct benefits relate to the revenue that is associated from the proceeds of oil and the employment that is created. The indirect benefits relate to the sort of local content, products and services that serve to support the industry, and the induced benefits are essentially as a result of this increase in spending within the economy. You have an increase in household income that has a spillover on other economic activities, essentially. So there's a very interesting discussion in public dialogue, and that's around government stakes. So in as much as NAMCOR carries 10% of the state's interest through carried interest, so carried interest essentially means that you don't pay up until a certain point in time, whether it's before development or post-production, essentially. So if you look at the cumulative value that is accrued to the state, you're looking at about 54%. So 5% royalty, and you're looking at tax, petroleum tax of about 35%, and if you couple that with NAMCOR stake, we're looking at anywhere between 53 and 56% essentially, and of course other additional windfall taxes of 5 to 12% that are essentially negotiable. So that is the value that is accrued to the state. And when we have a conversation around the oil and its contribution to the sector, to socio-economic development, this is the conversation we can essentially have. So that's just how the government take compares with other jurisdictions. So we compare quite well. If you look at Guyana, they've got 2% of royalty, whereas ours is 5%. This is just conversation around the capex spend that our Right Honourable Minister referred to. We speak of the economic benefits in as far as GDP impact is concerned. So there's an expectation that these discoveries will double Namibia's GDP by 2040 to close to $37 billion US, and of course at peak. With these conservative estimates, and these are just conservative estimates, we're looking at about 3,600 to 4,000 direct jobs essentially created by the sector. So indirect and induced benefits, so these are the spillover industries across the oil and gas value chain. So within the core of the onion, we're looking at your more technical services, so well services, ring hire that really requires sophisticated operatorship competencies. And as you go into the outer space of the onion, you look at more of the sort of available resources in country that can participate in the discovery. So whether it's freight services, electrical engineering, maintenance, and so forth. So Deloitte is at the instruction of the Ministry of Mines and Energy, busy with a baseline study to understand the sort of skills that are required and the sort of industries that will be created by the sector, and that's probably how entrepreneurs and service companies can position themselves. So I think before I end off, I think an important conversation to be had is really around the resource curse. So the resource curse, I think this is probably underplayed. In economics, as an economics lecture, so it's referred to as the Dutch disease, and this is really the apparent causal relationship between the increase in economic development in a particular sector, for instance, oil, you have a discovery, and then of course a decline in other sectors such as manufacturing, essentially. So because the sector offers significant premiums, everybody and all businesses, human resource capacity is concentrated in the petroleum sector and suffocates other aspects of the economy, essentially. And the term was coined in 1977, where you had a decline in manufacturing sector in the Netherlands after the discovery of large natural gas in the Ghanaian field in 1959. Of course, generally, the resource curse is caused by too much of the country's capital and labor force concentrated in a particular jurisdiction. So, just to give you a typical example, so once you have a country whose fiscal break-even oil price is essentially high, you run the risk of the resource curse. So an oil exporting country's fiscal break-even oil price is the minimum price per barrel that the country needs in order to meet its expected spending needs while balancing its budget, essentially. So if you've got effectively a country such as Algeria, so you can see that the projections in 2021, in order for them to balance their budget, the oil price must be 169.6 US per barrel, essentially. This is a significant challenge for them, because if the oil price tanks, essentially, then you've got a deficit in the budget, essentially. So rounding up. So how do we leverage the oil discoveries? 1 minute and we'll wrap up. So the conversation around integrating further midstream. So we take our cues from the recently developed draft ownership policy, the state ownership policy, to determine the extent of participation for NAMCOR. So there are 3 precincts that determine, the participation of a commercial enterprise. One is to correct market failure or gaps in the market. Second is to ensure the ownership, exploitation, and management of key natural resources, for instance, petroleum resources. And 3 is to safeguard economic interest. And we believe that the opportunities that we're looking at, we're in the process of developing a 10 to 15-year master plan, and there are low-hanging fruits that are associated with these discoveries. The first conversation is around the pipeline. So these are obviously offshore operations that are 300 kilometers offshore, and there's an opportunity. So we traveled to Norway a month ago, and we got an appreciation that Norway has about 8,800 kilometers of pipeline. So this is an entire steel industry, and with Namibia's iron ore capacity, you can leverage that and transition your raw material and create sort of an industry. So those are the conversations we're looking at. The other conversation is around a refinery. We had a visit to Angola at the back of a cabinet resolution looking at equity into the Lobito refinery. They are constructing a refinery of about 200,000 barrels per day, essentially. And if we can look at that opportunity locally and see whether we have the sort of critical mass to support that refinery,